Conversation forward, where are markets headed, and who better than Mihir Vora, CIO at Trust Mutual Fund, to throw some more light on that. Mihir, hi, good morning, good to have you on the show. We were just making the observation that this is the first time perhaps in about 20 years that the Nifty has consecutively seen a decline for 5 months alone. Do you think we're, nearer to the end of the pain perhaps?
I would certainly think so. It also needs to be seen in light of the fact that Nifty also has gone up for 9 years in a row, which has also never happened. So, there was a bit of a correction due. We have a dream run. We've had a dream run for 9 years almost. And I think a 10-15% correction is kind of, I would say, still a normal correction in the scheme of things. I was just looking at the data. While from September till now, India is probably amongst the markets which has fallen the most. In a 5-year frame, if you look at the number, India is like by far the best performing market in the world. So I think we were doing very well. I think we will continue to do very well. But run a little bit ahead of time. Maybe this kind of correction is I would consider as normal. A few factors which also maybe going for us. One is that locally liquidity is coming back into the system. We had very tight liquidity, and because of that, credit growth also was down. The dollar was very strong. DXY had touched as high as from 100 in September. It had almost 110 till recently. But that also seems to be correcting. We are closer to 106 now. So a lot of the technical factors, the currency factors, liquidity factors are kind of normalizing. And with that, if we see credit growth and growth come back, we should then, if we look back after 6 months, probably we'll say that this was a normal cyclical correction.
Mihir, I think the problem is in the data that you flagged off, that for the last 9 years, the Nifty has given a positive return. And especially since the COVID lows, right? The retail janta, which has just come in the market, has never seen a correction at all in their investing lifetimes. And in the last 2 months, we have been seeing some SIP closures. Do you think this could actually snowball into something bigger?
I think it would snowball if we see 6 to 12 months of continuous negative returns. We have seen that even when the large correction happened, of course, maybe the base was smaller, but even during COVID, the COVID corrections, we did not see outflows in mutual funds. We actually saw, good money come back. And then I think when the markets recovered, then you saw some outflows. So people maybe won't sell when the markets are going down. But when it recovers, probably then some people might come and say, okay, maybe I've reached my earlier price. Let me take some profits.
Hi Mihir, this is Shrishti also joining in, but give us a sense on the sector picture, Mihir, because we are just we just completed that Q3 earnings, and everybody has been flagging off that now we are seeing a single-digit growth for the Nifty 50 companies at least, and there are a lot of downgrades that are coming in, and hopes from 2025 should be really less. But any reading within the Q3 earnings so far, any sector that stands out for you?
So I think, as I said, it was a bit of a combination of things. One, credit growth because of liquidity had come down, so that created a slowdown. And we also had government spending in the first half really going slow on the capex front. So a lot of the disappointments we have seen is also in the construction, the cap goods, maybe some of the railway defense names also, because the orders did not flow through as expected. So and this was some of the hottest sectors to kind of to bet on for the longer term. They still are. In the long term, growth story is intact, but over 6 months when there were very few orders coming in, probably we are seeing earnings getting postponed rather than downgraded forever. So that's one of the big reasons. We've also seen some downgrades in the commodity linked sectors. So energy, oil and gas, metals also have been downgraded. Financials have been downgraded because, as I said, of the credit growth situation. But going forward, it does look like at the Nifty level, 10% earnings growth for the next couple of years is quite perfectly doable. And even now, as we speak, the small cap and mid cap index growth, especially the small cap index earnings consensus growth, is still between 50 to 20%.
Right. Very good morning to you, Mihir. Cheryl also joining in the conversation. And given the fact that you did mention that we've seen a sharp run up, this sort of a correction was warranted. But do you think now we are in the valuations are in the buy zone for the markets? And if yes, then which of the sectors do you think merits a relook?
Sure. So even before the correction, we were saying that the best risk return or valuation versus growth balance is in the large cap financial space, because this space had been underperforming the broader market even before this correction. And the factors that we talked about, lower credit growth, tight liquidity, and FII selling, all these were working against the big financials, both NBFCs as well as the large private sector banks. These are, unwinding. I would say these are correcting, and we should see a cyclical business growth in the financials segment. And as I said, after 2 years of underperformance, the valuations were anyway, even before the corrections, quite attractive. So the good thing is that financials are a large chunk of most of the benchmarks, whether it's the broad-based benchmark like the NSE 500 or the Nifty 50. In the Nifty is closer to 35%, in the broad-based benchmark closer to 28-30%. So this is a large chunk of the market which should do well and offers a good risk return and valuation valuation versus growth balance. So that gives me some confidence on the overall market also that things should turn around. So that's one segment which looks good in any case. The second is this entire physical asset creation space, which was a darling in terms of the stock markets, and which has also been one of the worst hit in the last in this correction. Stocks are down anywhere between 25 to even some cases 40-45%, because as we just discussed a minute ago, some of the orders which were supposed to flow through from the government side did not come through in a lot of sectors. But the long-term story is still intact. Government is maintaining its capex spending situation across sectors, not only talking about roads and infra, but across the spectrum in defense, railway, etc. So that postponement of orders is something that hurt the market, and that should also start getting undone in the next few months. So I think these two segments look good. In healthcare and all, it's more of a stock-to-stock situation. So I would kind of pick and choose, but in general, in our portfolios, we are still quite overweight on the healthcare space also.
That's quite interesting. Where within healthcare, Mihir, do you find opportunities? I mean, would it be via ancillaries like insurance? Would it be via diagnostic names, hospitals?
We actually have a whole bunch of names in healthcare. We have global generics, we have CDMO linked plays, we have diagnostics and hospitals. That's why it's a very heterogeneous chunk. It's not one particular theme. We have stocks across the themes.
All right, but Mihir, since in the budget as well, we have seen a big boost coming in for the consumption. So definitely the people, the money is likely to flow in the hands of the people, and maybe in the next 1 year, we can see that trickling into the economy as well. But what's your sense that within the consumption basket, which are the pockets that one should be looking out as an investment opportunity?
So structurally, we are always more positive on the premium end of the consumption basket, whether it's in services or products. Services like airlines, hotels, a lot of things to do with travel and tourism and other services. I think that eating out, discretionary services like QSRs, etc. Those should continue to do well. Then on the other premium side, you have spaces like gems and jewelry. You have high-end auto, high-end real estate, etc. So those should continue to do well. On FMCG, we are not that positive because it's a reasonably saturated category. So we don't expect any penetration gains to happen. And while the rural economy is coming back slowly, it's not a segment where we see double-digit growth on a sustained basis. We would rather stick to the premium consumption side. The other thing about you mentioned the budget benefits. It could also partly go into savings. The tax savings that the finance minister has given to the taxpayers. Of course, part of it will go to consumption, but part of it can also go to savings and the capital market link stories, or it could also go for deleveraging also, or a releveraging, because then you can buy a bigger house or a bigger car if you were, since you have extra disposable income. So I think it's a play that can work in various segments.
Mihir, there's been a lot of debate around whether small caps are the way to go right now or not, whether you should just restrict and park your money within large caps. If someone had to start a SIP right now, tell me, what would the Trust Mutual Fund advice be? Let's break it up, 100 rupees, divide it into various schemes.
Sure. So, a core holding should always be a flexi cap fund. If you're starting for the first time, I don't think you could start the mid cap or a small cap fund. You should always start with the flexi cap fund, because in the flexi cap category, you are leaving the decision making of the market cap category to the fund manager. So that headache is off your head, because if you are the first time investor, you're not probably that sophisticated. As your horizon for investment increases, and as you gain in sophistication and understanding of the market, you are able to bear a little more volatility, go a little above the risk, above in the risk return spectrum. Then you could look at the mid cap and the small cap category. So I think it's really a function of where you come from, what's your starting point.
All right, then we leave it there. Thank you so much for that, Mr. Vora, for joining us on the show to talk about where should one actually park their money at this point in time, and also talking about various sectors which are looking attractive. Thank you so much for being candid and actually sharing your market views. If you look at markets, a tad bit of recovery.